Okay, well, good afternoon or good morning, depending where you are. It's morning where I am. Thank you for the opportunity to present this paper today. This is work with my PhD student, and what we're interested in investigating here is the concept of retributive justice and tax compliance. And we're interested specifically at looking at what happens when someone is or is not punished for tax fraud, and how that in turn impacts observers' tax reporting decisions. It's really a paper about possible spillover effects. Okay. Now, just to get you thinking about this topic a little bit further, I'm going to put a simple example up on the screen here, which you've probably all heard of before. Brenni Madoff. He's currently serving a very, very, very long jail sentence. He'll not be able to outlive that for a multi-billion-dollar Ponzi scheme that he initiated. What would be the reaction of somebody if they found out that Mr. Madoff was or was not punished for what he did? He actually was in this case, but what if he was not ever punished for engaging in this multi-billion-dollar fraud? Well, that's going to send a message to observers that somewhere there was an authority that was not doing their job. Alternatively, if Mr. Madoff was punished, which he was, then that also sends a message to observers that somehow there was an authority that knew about the situation and was able to act on it and serve justice on this individual. Now, if we think about tax fraud more specifically, there's an example of a fraud that occurred in Canada in the year 2016, which is the basis for this research here. It occurred in the Isle of Man. It was known as the KPMG Isle of Man tax sham or tax scandal. There are multiple examples, though, of tax frauds all over the world. A relatively common example would be something like the Panama Papers, or at least where there are these abusive tax schemes. What happens if an observer finds out that someone was or was not punished for either engaging in outright fraud or at least participating in an abusive tax scheme, which is arguably fraud? That's going to send a signal that an authority is either competent or incompetent. Right? So if there is a case of fraud and someone is convicted, then that's going to signal competence, and that in turn can improve others' compliance. But what if there is no conviction? Then that tax authority is really sending a message to taxpayers that they're inept and incompetent, and therefore there's no real incentive for someone to be compliant. So with these thoughts in mind, that leads us to a research question here, which is, how does a tax fraud perpetrator's successful or unsuccessful conviction influence other taxpayers' compliance decisions? It's really a question about spillover effects. Now, to think about this question in a little more detail, we're relying on a couple of streams of literature. And the first one is the literature on retributive justice. And before we talk about that, let's just back up for a second and talk more generically about what justice is. Justice or equity or fairness, they're all synonymous terms. Justice is a perception that is based on a comparison. If you think about a situation in your life where you think that's unfair, or that's fair, why would you arrive at that assessment? It's because you've compared yourself with something. Maybe you thought something should have happened that did not, but it's very basic. It's a comparative judgment that individuals make. And there's quite a bit of tax compliance literature about different dimensions of justice. For example, there's distributive justice, which can be partitioned into things like horizontal equity, vertical equity, excuse me. There are other forms of justice, such as procedural justice, which is referring to the process that leads to an outcome. There's informational justice, which is the quality of explanations that a taxpayer gets from a tax agent. There's also interpersonal justice, which is the quality of the interpersonal encounter that somebody has. What is largely missing from the tax compliance literature is retributive justice and how retributive justice impacts tax compliance. Retributive justice is this notion that the punishment fits the crime. Does an offender deserve to be punished? And if so, what should that punishment be? It is a relatively subjective assessment. The idea here is that retributive justice is served if an offender is punished in accordance with the severity of their offense. If they go unpunished, then retributive justice is not served. So what we're going to be investigating in our study here is the influence of retributive justice when someone deserves to be punished and either is or is not. How does that in turn affect a third-party observer's willingness to be tax compliant? Now, what we're doing in our paper, social psychology, which we have developed from Professor Norman Feather, and he came up with a model. It's called the social cognitive model to punishment reactions. And his model consists of three key components. One is responsibility for a transgression. Was someone solely responsible or not? And we, in our paper here, you'll see we manipulate that. Was someone deserving of punishment? That in essence means, did they earn the punishment that they received? And then there's also effective reactions, which is the final or end link in his model, which is really an emotional reaction. And what his model does not do is explain how someone might behave based on their reaction. So we extend this model to the tax compliance setting and say, once someone's going to react in a certain way because someone has been punished or not, then we expect them to be more or less tax compliant. And we have a diagram coming up soon where you'll see how all these pieces fit. Yeah. There's also some tax compliance literature which supports a positive association between affect and tax compliance. So what that is really saying is, if someone is satisfied or pleased because someone has been punished in our context, they're more likely to be cooperative and compliant. If they have lower affect, it means they're not as satisfied, they're not as pleased with an outcome, therefore they're going to be more non-compliant. So if we were to put these pieces together here, what we're going to be investigating is this model here. And to point out three of the pieces of it, you'll see responsibility, and that is the degree of culpability or blameworthiness for an offense. Was someone solely responsible, or could they diffuse their responsibility because they were part of a group or maybe advised by someone else? So a responsibility, punishment deservingness, which is this idea, did someone earn their negative punishment? And then there's effective reactions, which is the emotional response to whether or not someone got what they deserved. But those three pieces there are in this model by Feather. And we extend it in a couple of ways. We include whether or not someone was actually punished or not, because in Feather's model, he always assumes that people are punished, but certainly in a tax context and even in the broader fraud context too, individuals are not always punished. If you think about something like the Panama Papers, some individuals were investigated, a few were punished, but many were actually not. Therefore, it's not a foregone conclusion that just because there is a case of fraud or possible fraud, it does not mean that someone's going to actually be punished for it. So we are going to be conducting an experiment in which we manipulate whether or not punishment actually occurred. And then we're also going to manipulate whether or not someone was solely responsible or blameworthy for their fraud, or whether they were less responsible because they were advised by someone in an accounting firm. And then the final piece to our model is this behavior, the affect-driven behavior, which we are going to operationalize as tax compliance intentions. Okay, so this model might look a little bit complicated. It's actually not too bad, and I'm not going to spend over much time talking about it more than that. If you have further questions at the end, we can go through it. But essentially, what this model predicts is that someone will be reacting to someone else's punishment, and it's a function of whether or not the perpetrator of a crime, or in this case, a tax fraud, is responsible for their offense. Did they earn a certain punishment? Did the punishment actually occur or not? And based on that, then an observer is going to be relatively happy or satisfied if a punishment occurred and someone earned it and they were responsible for it, or they're going to be less satisfied and more unhappy if somebody who committed a crime went unpunished and therefore did not deserve what they should have received. Okay, so we conduct an experiment here. We manipulate two independent variables. One is the occurrence of punishment, and the other is whether or not a perpetrator of a tax fraud was solely responsible, or whether they were able to diffuse their responsibility because someone else advised them. We have three dependent variables here. We measure punishment deservingness, effective reactions, taxpayers' compliance intentions, the three measured variables in our theoretical model. And we conduct this on 399 Canadian taxpayers. These are all adult taxpayers. Now, what we did in our experiment, we had participants read a news story which mimicked this KPMG Isle of Man tax sham. And I'll give you a short example on the next slide of what someone may have seen as they were doing this experiment. And we put this in the context of, we had people read ethical vignette, and we had them imagine that they were the individual that they were reading about, who we chose the name Chris as a gender neutral name. And this individual here was a entrepreneur, and they owned a food truck. So we wanted to have a situation where there was an opportunity for cash, therefore an opportunity to be non-compliant. And then we also introduced this manipulation where the person reading the story knew that this individual here had invested funds in an offshore tax shelter, which was in the Isle of Man. So we were trying to create realism in our experiment by using an actual real life situation of tax fraud, which happened in Canada. We then measured their tax compliance intentions. So we asked them if, what do you think, Chris, the person in this scenario would do? And we also measured effective reactions, punishment deservingness. And then we collected fairly standard demographic measures like age, income, etc. And then we conduct our analysis, and you'll see what happens momentarily. Now, just to give you an example of the manipulation itself, we had a 2x2 experiment. So there are 4 different experimental conditions. There was the presence or absence of punishment, and that was crossed with higher and lower responsibility. So this is just one example here. This is where the individual was not punished, but was solely blameworthy or responsible for what they did. So I'll just read this. Several years ago, a number of wealthy individuals wrote a brochure about paying less taxes by investing funds in a company on the Isle of Man. The individuals acted on their own, didn't ask anyone for advice, and made the investment. Now that is the higher responsibility condition there. What actually happened in real life was the individuals were advised by tax partners at KPMG to invest in their funds in the Isle of Man. But responsibility can be higher or lower depending on the degree of involvement someone has with an advisor. Now, reading on here next. Recently, the taxpayers were all audited by the CRA. As it turned out, the tax shelter was a bogus arrangement that was intended to deceive the Canadian government. The taxpayers had to repay all the taxes they evaded, which is a standard practice and not a punishment. However, the taxpayers were never punished. They were neither fined nor sentenced to jail. Now, that's what actually occurred in our real life setting. The taxpayers who engaged in this tax sham were never punished. They were not fined. They did not go to jail. Now, one sort of side comment I should make here is when retributive justice is served, it's not just enough to make restitution. So for just use a non-tax example, suppose I shoplift and I steal a candy bar from a local store. If I then return the candy bar, that is not retributive justice. I have really just made a restitution. That's called compensatory justice. So if I just replace what I have stolen, that is not retributive justice. For retributive justice to occur, there has to be some sort of action over and above just restoring what was lost. And so what we were doing in this scenario here, when we say here that the taxpayers had to repay all the taxes they had evaded, which is our standard practice and not a punishment, we are saying that to indicate that their could have been something over and above simply repaying the taxes, because a repayment of taxes in and of itself is not a punishment. That is just making restitution. A punishment would occur over and above repayment of taxes. And so in this condition here, where there was no punishment that occurred, we stated that these taxpayers were neither fined nor sentenced to jail. In the condition where the punishment occurred, the taxpayers were fined and sentenced to jail, and that is actually what would occur if, under the Criminal Code of Canada, people were convicted of tax fraud. Okay, so we have our hypotheses, which are really just piecing together all of the different components of our model here. I'm not going to get into that. Overall, we are predicting an indirect effect of responsibility for committing a tax fraud on compliance intentions, but the psychological pathway is relatively complicated. This is not relatively straightforward. It might be relatively intuitive to predict that if someone is solely to blame for committing a tax fraud, and if they were punished, then if you're a third party, you would say, yeah, I'm relatively pleased with what happened there. But to understand why that would significantly influence tax compliance, that's not quite as straightforward, which is why this model here looks relatively complicated. Okay, so what we found, without going into all kinds of details here, what we were expecting and what we found was that people were pleased or satisfied when somebody was punished and when they were solely responsible for what they did. And the means here are the highest in that condition here, which is circled. So where somebody was actually punished for tax fraud and where they acted on their own and were solely responsible, that leads to the highest amount of effective reactions or the highest degree of pleasure or satisfaction among third-party observers. And that in turn leads to the highest overall tax compliance intentions. Okay? So what we were expecting to find and what we actually found was, if somebody is solely responsible for committing a tax fraud, and if that person is actually punished, then observers' tax compliance intentions are the highest. In other conditions, especially where someone was not punished, as you can see here, the means are like 3.53 and 3.57. Tax compliance is significantly lower. Right? Now that might be a fairly intuitive finding, but the psychological pathway to actually arrive at the intentions is relatively complex. Okay, so what our contribution is, we're extending tax compliance literature about retributive justice. There are only 2 papers that we know of that have examined retributive justice in a tax compliance setting. And they don't go into a lot of detail about the psychological pathway that actually leads to an observer's compliance decision. We provide empirical evidence of Feather's model. No one has done that before. And one thing I did not mention earlier, but one of the things that we controlled for was the threat of was audit likelihood and also detection likelihood. So if the person here that was in our scenario, we asked in our survey whether or not respondents thought that the tax authority was likely to audit this individual, and if the person was audited and committed fraud, was the tax authority likely to uncover that. So we also controlled for several key economic variables that are known to influence tax fraud, and we found that our model was robust to those. Both of those variables were not a significant covariance. So that shows that psychological variables, as opposed to economic variables, are critical to the tax compliance decision. And then I guess our last takeaway here is that punishment can promote positive change. It is important for tax authorities working in tandem with the judicial branch of a government to hold taxpayers accountable for wrongdoing. And if that's done, then there is a salutary or positive impact on third-party tax compliance. If, on the other hand, someone is not held accountable and goes unpunished, then there is a negative impact on observers' tax compliance. So that, in essence, is our paper. I think I had 20 minutes, and I'm 20 minutes up. So I will stop talking.
Thank you very much, Jonathan. Very interesting presentation, and very timely. Thank you. Please, put your questions into the chat box, and then while you're doing that, okay, let me ask a couple of clarifying questions, if I may.
Sure.
The first one relates to the taxpayers. Do you have any? Can you shed some light on the distribution of taxpayers? What kind of taxpayer in terms of income I'm interested in? Are these high net worth individuals?
Sure.
Who are these guys?
Okay. What I'll do is
while you're doing that. Okay, that's the first one. And the other is you might have alluded to that, but in case I missed it, I apologize. Can you say a little bit about the size of the penalty?
First, yeah. So why don't I'll just share my screen here. This is just a table from the actual working paper, which just shows in a little more detail what some of the demographic characteristics of the sample are. Mm-hmm. And I think you asked about income. So yes. So the income distribution here, it's relatively a normal shaped distribution. So we had people at the low end, a few people at the high end, and a lot of people right in the middle there.
Okay, and how do these income classes respond?
So we found that our results are not significantly impacted by income level. So we use income as a covariate, and there are no significant differences to our results according to income level.
Is that surprising? Does that surprise you a little bit? Especially given the size of the fraud that you have been describing. I expect for low income individuals, I mean the reaction to be.
Well, if anything, like I might think that higher income individuals would be more sympathetic to the individuals who are trying to avoid taxes because they're going to be taxed relatively more. So I may have expected that there would have been some differences in responses according to high versus low income levels. Yeah. But that's not what we found. Perhaps if we had just studied like very, very, very high income earners, which is like 0.1% of the population, we may have found some differences there, but it's impossible to tell from our sample whether or not we would have found that effect or not.
Okay, wow, that's interesting.
And then the other question you asked, Christos, was about the penalties themselves. So how it works in Canada, there are administrative penalties under the tax code itself, and then there are also criminal code of Canada penalties, and both of these can apply at the same time. So if someone is prosecuted for tax evasion and they are found guilty, they can go to jail for up to five years, and there will also be a penalty equal to 5% of the taxes evaded, and for every additional month that the taxes remain unpaid, there's an additional 1% charge plus interest. If someone is, say, like late when they are supposed to make a payment and they file or they make the payment late, there's going to be an administrative penalty there. So what we were really trying to capture is what is the effect of the criminal situation, as opposed to just sort of the ordinary everyday situation. If a taxpayer makes a payment late, which is not a criminal thing, maybe they are supposed to make an interim tax payment, or they're like the balance on their personal tax return is due by a certain date and they're a week late or something like that. There are going to be some negative consequences there, but the person isn't going to be going to jail. Right?
Okay, interesting. Any more? There's a question in the chat box. If you can you see it, Jonathan?
Yeah, I can see that.
Thank you.
Okay, so the comment is, there's a case in Indonesia. A taxpayer has done some tax evasion and was given the largest monetary penalty in the history of Indonesia. Now, this case required a lot of effort and sacrifice from the perspective of the tax office, and has never been done again. So imposing a penalty is difficult if the resources are limited. Right, and that's really one of the issues here is, from the perspective of a tax authority, to engage in a prosecution is a tremendously complicated and expensive effort. It takes a lot of hours, and it's going to take a very long time. There was, in Canada, there was a parliamentary hearing about this situation. The government wanted to know, why did KPMG sort of get off the hook? Why were they able to legally advise these clients to do something that was abusive? And why did they get away with what they did? And why were these taxpayers never, why did they not go to jail like they should have? And the assistant deputy commissioner of the tax authority said that they had to do a calculated risk. If they had gone through with this prosecution, and if they had lost, that would have set a very negative or unfavorable precedent, which would have not worked in the favor of the tax authority in the future. So what the person was saying in effect was, they were hedging their bets, and they thought it was better to try and cover this thing up and have the taxpayers repay the monies that they owed, which is not a punishment. But they were afraid that if they had actually prosecuted this case and lost, if it had gone through the court system, then that would have opened the door for greater incidences of abusive tax avoidance. So I guess the risk is, from the perspective of the tax authority, if they attempt a prosecution and lose, then if you're in a common law country, that's going to set a precedent then, and every other taxpayer says, well, look, these taxpayers in this case were able to successfully engage in this abusive tax scheme and they got away with it. We can do the same thing. So it's a risk.
Can I also ask, Jonathan? I guess your paper relates to the naming shaming.
Yeah.
I mean, would that be a policy you would advise?
Naming and shaming, that's in. There is quite a bit of tax compliance literature on that. Our results would suggest that is actually a good thing to do, because it sends a signal that the tax authority is competent at prosecuting and convicting taxpayers for wrongdoing.
Does Canada have that?
Yes, they every time there is a conviction, the tax authority has a public release on their website. Part of the problem, though, is that a lot of the convictions are not for tax fraud. They are for people who do not file tax returns or that sort of thing. So the crimes that people do are not overly severe. But if there was a conviction for a tax fraud, which doesn't happen very often at all, there are less than, on average, there are less than 100 convictions for tax fraud every year here, and there are a lot more than 100 tax frauds a year going on. So if they were able to make better use of public disclosure about tax frauds, I think it would have a good impact on other people's compliance.
Excellent.
Okay, thank you very much for having me. It's actually my first time presenting at the TARC, so I would appreciate feedback that would help us improve the paper. So this is joint work with Wilfred, Damien, and Dennis, Philip. All right, so without belaboring the point, it's very clear that the workhorse for tax compliance is the Allingham and Sandmo model. But then over the years, the applicability of that model in the real world has been called into question, which has given rise to alternative explanations for tax compliance, and most of which are rooted in non-pecuniary motivations for tax compliance, such as guilt and shame, reciprocity, and peer behavior. However, we note that when it comes to tax compliance behavior with respect to housing tenure decisions, there's very little evidence. And so this work is an attempt to look at that. So in particular, what this study aims at doing is looking at the tax compliance behavior of owner and tenant occupied dwelling units. So essentially, we're looking at a situation where a homeowner rents out part of the property in which he and his immediate family occupy. And one of the reasons why we deem this interesting is the fact that such housing arrangements have become increasingly popular in current times, owing to economic challenges, which make it difficult for people to get onto the property ladder. Typically in the developing world, Ghana, especially, we find these arrangements to be very, very, Ghana to be specific, which the study is based on. We find this kind of housing arrangement to be very prevalent. And then also, one other twist to it is the fact that a priori, it's difficult for us to tell whether the tax, to tell the tax compliance behavior, or to make a determination as to whether these housing units are more likely to be compliant or less likely to be. Because on one hand, the extra rental income suggests that they should be able to pay, or they should be more compliant. However, we also note that what informs the decision to rent in the first place could be income challenges, which then means that they should be less likely to pay their property taxes. And all this holds in jurisdictions where there's weak regulatory enforcement. And we're specifically looking at a situation where the homeowners are liable for property tax payments. We know in certain places like the UK, whoever occupies the property pays the council tax or the property tax, but in certain jurisdictions also, the homeowner has, jurisdictions like Ghana, the homeowner has the legal responsibility for property tax payments. And then from a policy perspective, I think the question arises as to whether the homeowner who is within the owner and tenant occupied dwelling unit case should be regarded as a pure landlord, in which case he must be taxed more, or should be seen as an owner occupier and charged less so as to encourage home ownership. So just by way of related literature, the two papers which are in some way connected with what we do. So Alm et al. 2014 paper where they looked at property tax delinquency in Detroit in the US, pretty much found that owner occupiers have a lot to lose, in which case they are less likely to be delinquent. So they also find that property tax delinquency is higher in areas which have longer police response times. Then Abel et al. In 2017, in a study based in conducted on Jerusalem data, Jerusalem, Israel, also reports similar findings in the sense that owner occupiers tend to be more property tax compliant than tenants or renters. But then we note that none of these studies distinguished between the pure owner-occupier case and the situation or the case where the owner shares the property with tenants. So we develop a theoretical framework, which I'll just highlight the main predictions because the heavy lifting is on the empirical side, which I want to get into. So we basically develop a theoretical model which allows the dwelling units to self-select into the occupancy types. And what we find is with particular reference to the joint occupancy, where the owner shares the property with the tenant, we find that if income constraints inform that decision, then the additional rental income the homeowner receives is not able to relax those income constraints, which means that they are more likely to renege on their property tax obligations. And then we also find that they are more responsive to non-pecuniary motives for compliance, which we model as an intrinsic cost of compliance. We basically look at that in terms of compliance pressure within the vicinity in which the dwelling units are located. So the data for the study is from the Accra Metropolitan Assembly in Ghana, which is pretty much like the local, the largest and most sophisticated local government unit in Ghana, which has oversight responsibility for the capital city, Accra. And we have observations on the cumulative property tax arrears. So arrears in the data are not recorded year by year, they are accumulated on a yearly basis. And then the data also provides information on dwelling unit types and the like. So only thing I'll highlight here is the fact that owner occupiers in the data make up about 60%, and then the joint occupancy category, where the owner and the tenants share the property, is about 18%. And then the remainder is for tenant occupiers. Then this just goes to also from the, just to highlight how the property taxation in Ghana, or the property tax rates, are based on rating zone classes. So a class 1 property, for instance, would attract a higher property tax rate than a dwelling unit in class 2 versus a dwelling unit in class 3. So effectively, 1 has the highest property tax rate and 3 incurs the lowest. Yeah, so just to touch a bit on the variables. So from the data, we note that, so ordinarily the property tax fee or the property tax liability is a function of the property tax rate multiplied by the rateable value or the property value. But then we note that in some cases, in order for the government, the local government, to ensure that a certain minimum threshold of revenue is met, there's a minimum rate, which is like a flat charge, which the properties are supposed to pay. So in the event that a dwelling unit pays the minimum rate, we can effectively estimate an effective property tax rate imposed by dividing that minimum rate by the rateable value. And I must say that the rateable value is valuation based as opposed to a market rate for the property. Yeah. Yes, so the study effectively is based on, we look more at the property tax arrears period. So we look at a delinquency or a non-compliance period as opposed to the monetary value of the delinquency. So because our cumulative arrears figure is as of 2018 versus our total amount of property taxes due, which is from 2011 to 18, we're able to estimate for each dwelling unit the number of years it has been in arrears for. And we also note, though, that in the data, there are some properties or there are some dwelling units with arrears, going beyond 8 years. So what we've done here, what the graph basically shows is, if you take a look at the more than 8 years category, you find that there are about 35, more than a third of all dwelling units in our sample have been in arrears for more than more than 8 years, which highlights the point I made earlier regarding weak regulatory enforcement in the developing world, such as the case we have in Ghana. So on the analysis front, we basically use a multinomial logistic regression model to analyze the data. So what we did was we create 7 categories of the arrears period, starting from the category with full compliance to the more than 8 years. So basically what we have is arrears buckets. And so each dwelling unit will fall in one of these. And then we basically use a multinomial logistic regression model to analyze this. So basically our model, the empirical model, the dependent variable yi is the log odds of the probability of a dwelling unit being in A1 to A6 with respect to the base category of full compliance. And then owner tenant is a dummy variable which takes on the value 1 if a dwelling unit is joint occupancy and 0 otherwise. Tenants also the same rating. So the base category here is the owner properties that are owner occupied. And then we have the property value and some other controls. So the initial set of results we find, so where we have the owner tenants highlighted gives us the results for the owner and tenant occupied unit relative to the base category of the pure owner occupied properties. And then we have each of the categories here for the arrears with respect to the full compliance category or the 0 arrears category. And we report relative risk ratios. So effectively a ratio above 1 is indicative of an increased risk of non-compliance or delinquency. So in the first category, for instance, in the up to 1 year category, basically shows that the joint occupancy, or let me just call it mixed, is about 11% more likely to be delinquent relative to the owner occupied category. And you realize that with the exception of the 1 to 2 years, the results are fairly consistent for 2 to 4 years, 4 to 6, 6 to 8, and then the more than 8 years category as well. So actually you find that it rises, the more prolonged, as the arrears tend to be prolonged from 2 to 4 to 4 to 6, there's a rise from about 16% to 26. And in the more than 8 years category, you have about 26% increased likelihood of arrears for the shared occupancy or the mixed occupancy category. Then what we also do is we analyze the effect of property tax increases on property tax compliance. So for each dwelling unit, we calculate its the property tax increase from 2011 to 2018, and then we find the overall median for all the dwelling units in the final sample. That allows us to split the sample to have 2 subsamples, those above the median rate increase, which was about 380%, and those below. So we then use the multinomial logistic regression model I touched on earlier to do a subsample analysis of the effect of property tax rate increases. So we, again, just put an emphasis on the mixed category, which is the point of interest. It shows basically that, so if you look at the high rate increase category, you would find, especially for the up to 1 year, the mixed dwelling units with high rate increases about 20% more likely to default on their property tax obligations, or they are more likely to be delinquent, whereas the result for those facing low rate increases is not statistically significant. However, we note that from 2 years onwards, you tend to see that the results are similar, regardless of whether they experience low rate increases or not, which in a sense highlights the fact that there could be some sort of challenge going there, happening there in terms of the financial circumstances of the mixed occupancy category, for which reason, regardless of the extent or the severity of the rate increase, there's still a risk of delinquency, especially as the arrears period is prolonged. And we also do an analysis in terms of the distance to, so basically what we do is we want to find out whether the distance to some amenities affects the property tax compliance outcomes of the dwelling units. So we have 2 sets of amenities, police stations and then the hospitals. And this is meant as an alternative test of the reciprocity hypothesis which Latma and Singal point out in their Journal of Economic Perspectives paper. So basically individuals would view taxes as part of a social contract, so they're making tax payments in exchange for services provided by the state. So using Google Maps distance estimates we use the shortest Google Maps distance estimate between the amenity and the suburb in which the property is located. And then again, we categorize based on the median into 2 groups, where we have those who have a short distance to the suburban police station, and those with a long distance, and then those with a short distance to the hospital versus those with a long distance to the hospital. And basically, those with a short distance are deemed to have a high access to the amenity, whilst those with a long distance are deemed to have low access to the properties. Okay, I think I'm running out of time. So we basically use an OLS estimate to just check like a suitability check of the proxies, and we basically find a positive relationship between the arrears period and the distance to the amenities. So if you take column 3, for instance, a 1 kilometer increase in the distance to the police station should increase the arrears period by about 71 days and 76 days in the case of hospitals. That's if you multiply the coefficient by 365 days. So if we look at the distance to suburban police stations, again, we see that for the mixed category, especially from 2 years onwards, those with long distance are about 24% at more risk of non-compliance, about 50% 4 to 6, 6 to 8 about 34%. And then for the hospitals also, we have similar results, whereas the short distance results are not significant. We find that from 2 years to 4 years onwards, those with the long distance to the amenities tend to be less compliant, except for the long-term case where those with short distance exhibit some willingness to pay their property taxes, which might be due to some feel-good effects or some altruistic motives. So yes, just to round up, effectively, what this study has found so far is some preliminary evidence to show that the mixed occupancy category exhibits like a greater sensitivity, are more likely to renege on their property tax obligations, and are more sensitive to property tax hikes and non-pecuniary motives for tax compliance, which we model in terms of the distance to the amenities. And we believe that these have interesting implications for local authorities in developing countries, especially, because they are always seeking to boost property tax revenues, but are also faced with high cases of non-compliance. So they should take into account the fact that the mixed occupancy category are more likely to renege on the obligations. And then also, because they respond to the allocation of public amenities, as much as possible, there should be a balanced spread of the amenities that are provided in a way to encourage property tax payments. So that's it from me.
Thank you. Thank you, Precious. Thank you. Fascinating, very interesting presentation. Can I ask you to type in your questions in the chat box, please, when you can? Can I just check a couple of things with you? Firstly, can they make partial payments, tax payments, taxpayers? Can they do that? And are you capturing that in the data? That's the first one. The second one is I'm struggling a little bit with the economics behind. Actually, I would be expecting the opposite, because it seems to me that if there's more income coming in, I mean, your budget constraint is going to be relaxed. It's going to be less tight. So you're going to be more liquid, and therefore more likely to be paying your taxes. So why do you think this is in the mixed occupancy cases? Well, why do you think compliance drops? I mean, it doesn't sound to me very intuitive. Do you have any explanation for that?
Okay, so starting with the question on the partial payment. So in Ghana, typically the property taxes are paid once a year. So it's like a yearly payment. Mm-hmm. And the data doesn't allow us to determine whether partial payments are made. So I would believe it's interesting you raise it, because it's something for us to think about. In most
Go on, please.
Okay. In most cases, though, full payment is expected to be made, but it's something we'll interrogate. Then on the issue of the results not being intuitive in terms of the mixed occupancy category being expected to pay, and we made the point that in a sense, yes, on account of receiving the extra rental income, you would expect them to be able to make greater payments. But then if you also look at it, ordinarily, no one would want to share the privacy of their homes, the same homes they occupy with the tenant. So if you compare this with the case of the pure landlord who lives in his own home and has another property he's sublet to a tenant, mm-hmm. They are two different people in a sense, because by he renting out a portion of his own home, it may be suggestive of some income constraints there as well. So we do not know. One, they could pay on account of the extra rental income, but two, why are they renting out their home in the first place for the extra rental income? So that's what we try to establish.
I think intuitively, I mean, you would expect that, the reason I'm renting out is because I want the extra income. And once I get the extra income, I'm going to be using that, according to my preferences. But also part of that, might be, by honoring, my tax liabilities intuitively. But maybe there are other effects, kicking in as you allude to. Absolutely. I mean, I don't, but I think it's interesting to think through, the main channels and try to tease them out.
Okay.
Because to me, it is a counterintuitive result. But something to think about. Now, in terms of the partial payments, do you have the data people who didn't pay 10 years back, but they paid last year?
Do we have, say that again, sorry?
Do you have people in the data set where they didn't pay 8 years back, so they accumulated arrears back then, but then in the years before they paid?
Yeah, so because the data gives us the cumulative arrears, so it doesn't give us the year by year behavior. But then we're able to know the total tax fees that are due on a yearly basis in comparison with the cumulative arrears figure, which dates back to when they started recording the data. So we're able to tease out from that information the number of years each dwelling unit has been in arrears for.
But each year the house, the taxpayer has been in arrears, the status of occupancy in the house.
Yes, so the status of occupancy doesn't change for the period.
Okay.
So he doesn't move from, say, an owner does not become a tenant.
Okay. So what's your message, to the government? Is it that mixed occupancy is going to be more likely, and it's kind of profiling? You're doing some kind of profiling for non-compliance. Is that the message you're?
Yes, we actually had when was that? I think sometime last year, in May last year, we met with the local authorities at a policy workshop where we presented some of these results to them. And we basically told them, because they are seeking to increase revenues, but then non-compliance is a huge challenge. Mm-hmm. So we basically pointed out to them that it might be worth looking at the mixed category of dwelling units, which is very prevalent in Accra as well, mm-hmm. the capital, where obviously because of the challenges in rents, the high cost of rents and housing cost in general, people tend to do this. So yeah, we pointed that out to them, as well as some other tools in terms of what I even touched on regarding the distribution of public amenities. Mm-hmm. So it's like if you're constructing, say, toilet facilities, you've got to ensure that they are evenly spread, because if people do not have access to these things, then they're like, you're violating the terms of the social contract. So what's the point of paying the property tax in the first place?
Yeah, and I guess because you have a lot of people, 8 years and more. There was a big,
yes.
jump in the data, and I guess for those people, since you haven't collected for 8 years, it's unlikely that they will be paying.
Yes.
So identifying these guys early enough, it's very important. Yes. Now, my question now is, what do you do for these taxpayers? Because I guess they have accumulated so much tax arrears, you will never be able to get them. So do you have any policy recommendations for the government how to deal with that?
So apart from what I think you just touched on regarding the fact that it's got to be nipped in the bud before we have a case where you have more than 8 years, it's very difficult to find how you're going to get them to pay 8 years of arrears. What also complicates the matter is there's a lot of informality in terms of their addressing system in Ghana. So it's even difficult sometimes to locate the homeowner who is legally responsible for payment. And when the cases are also, the local authority has the ability to take the cases to court. But then when the cases go to court, the cases get stalled. Justice is not delivered. Yeah. So there's so much impunity because people know that they can get away with it. Yeah. So there are a lot of issues there.
Absolutely. Precious, I found that very interesting. Thank you. Thank you for joining us. Thank you.
Good evening from Indonesia and good afternoon to all of you. we would like to convey our gratitude and thank you for the University of Exeter and Tax Administration Research Center for the opportunity provided to us so we can present our working paper and our research here. The study we have done here titled "The Road Not Taken, Unlocking the Conundrums of Transfer Pricing Dispute in Indonesia." Both of us are senior officer at the Directorate General of Taxation of Indonesia. And the view expressed here do not necessarily reflect the official positions and the policy of the institution where we serve. So when we talk about the transfer pricing, so there are so many controversies around. As we know, in the research we cite in our working paper, 72% of the shifted tax base is contributed by transfer pricing, and it constitutes the primary vehicle for profit shifting strategy. So when we talk about transfer pricing, it's about the determination of the price between the affiliated parties when they conducted affiliated transaction. When the transaction occurred between the affiliated, between the associated enterprise, the price is not influenced by the market forces. So to make it be the arm's length price, it should be compared to the independent comparable, and it is often difficult to find a comparable from the independent transaction, because of the complexity of the multinational entities transaction and their structure. And even though the arm's length principle has been considered as the basis to determine the transfer price, as we know, the arm's length will depends on whose arms we measure. So there will be difference on the what constitutes the arm's length price. Therefore, it's not a surprise. It's not a surprise if the survey conducted by the Big Four here, the transfer pricing complexity and the uncertainty in transfer pricing is heightened even in the post-BEPS era. And furthermore, the OECD also stated that transfer pricing is not an exact science and requires professional judgment from both of the tax administration and the taxpayers. Therefore, it can be concluded that the uncertainty is inherent in transfer pricing. So, in our study here, we want to answer three main research questions. The first is, what are the core issues of the transfer pricing dispute in Indonesia? And then, what is the most efficient pathway for the taxpayers when they want to resolve their transfer pricing dispute? And the last question is how Indonesian tax authority could handle and prevent the transfer pricing dispute. So we want to analyze from the both sides, from the taxpayer side and from the tax administration side. When we want to analyze the effectiveness, we want to analyze from the cost element and the time element. Before we move to the answer for the questions, we want to present you the pathway to resolve the transfer pricing dispute in Indonesia. In Indonesian domestic law, when the tax audit has been done, the result will be stated in the notice of tax assessment. It is a letter issued after a tax audit, which indicates the tax obligation is underpaid, overpaid, or nil. And this is usually this is the base of the transfer pricing dispute. And when the taxpayer disagree with the result of the tax audit or do not satisfy with the result of the tax audit, they can take two pathways. The first pathway is litigation pathway, or we can say it the domestic pathway. It consists of the objection first, and if the taxpayers still do not agree with the result of the objection, they can submit the appeal to the tax court, and they can continue to the Supreme Court to have the judicial review if they still disagree with the tax court decision. I think in many countries, it will be the same procedure. However, based on our analysis, the litigation pathway, the result will be the win or lose output. And there are very large opportunity that the double taxation still occurred in the result, because the litigation pathway or the domestic pathway, the mechanism only examine one side of the taxpayer. So here the mechanism only examine the Indonesian taxpayer only. And the second pathway will be the negotiation pathway, or we can say it, the international pathway, and it will be go through the mutual agreement procedure, in which the tax administration of the two countries or two jurisdictions will negotiate each other to determine how much is, or to determine what constitutes the arm's length price or the arm's length range of the affiliated transaction conducted by their taxpayers. So if the mutual agreement procedure taken, the result will be win-win output. And based on the Article 25 in double tax agreement, there should be the a reduce of double taxation through the mutual agreement procedure. So in answering the first question is about what are the core issues of Indonesian transfer pricing dispute. We found that there are 7 core issues. The first one is formality, and then the comparability issues, and the selection of transfer pricing method, the segregated versus the aggregated analysis, the intra-group services issue, the intangible, and the financing transaction. Here we can present to you the resume which we found in our study. We found the core issues, there are 7 of them, and then what is the main issues, and the sample of the tax court decision, and the argument presented in the tax court, and what is the judge's decision. However, in this moment, we cannot explain all of them because the limited time. Maybe here I can choose 1 or 2. The first one, maybe I will, as the sample, the comparability issue. The comparability issue is the heart of the arm's length principle application. So therefore, the comparability is oftentimes be the core issues in the transfer pricing dispute. There are 3 topics in the comparability issues in Indonesian transfer pricing dispute. There are the selection of loss-making comparable, it is whether it is allowed or disallowed, and the rejection of comparable due to the material difference, and the use of multiple and the single year data. So here we can see that for the example for the use of multiple versus single year data, we can see that the DGT auditor prefer to use single year approach. Using the same basis, the taxpayer prefer to use the multiple year approach. And the judge here agree with the taxpayers. We can see here with the same basis, there are 2 different interpretations between the auditor and the taxpayer. Therefore, based on our analysis, the transfer pricing dispute can take a lengthy time, a long period to settle, and both of the parties, the tax administration and the taxpayer, should allocate a specific resource to handle the transfer pricing dispute. So here, another core issues, there are segregated versus aggregated analysis, intra-group service, issues of intangible, and financing transaction. For intra-group service issues, the intangible issues and financing transaction, the core issues, there are 3 core issues. It's about the existence issues, the benefit issues, and the arm's length price. Based on our analysis in the 131 tax court decision, which related to transfer pricing, it shows that the main issues actually does not revolve around complex related parties. Sometimes it's about a simple case. For example, the sufficiency of documentation. So, in our opinion, Such a case do not necessarily have to proceed to the court because it will take a longer time and do not necessarily result in win-win situation. And here we can present to you the statistic fact about the Indonesian transfer pricing dispute. We can see here the backlog of the outstanding case in Indonesian tax court for 2 years, for 2017 and 2018. The outstanding transfer pricing cases in tax court is about 111. Compared with the outstanding MAP case, it's almost half of them, half of the cases. And in 2018, it's the same condition. And after we review the average time of completion in tax court in litigation pathway compared with the negotiation pathway, if the taxpayers take the domestic or litigation pathway, it will take in average 38.76 months. Compared with the mutual agreement procedure, it will take shorter times. It's only about 27.25 months. However, the MAP pathway is not taken by the taxpayer. For the next slide, there will be my colleagues present. Andreas Rossi Dewantara. Andreas, the floor is yours.
Thank you, T.Qivi. Hello, Mr. Chair. Hope I'm audible. So I want to present to you a toy model, basically. So in this case, we want to analyze which pathway is more efficient for the taxpayer, with several assumptions, of course. First of all, we assume that this is the non-honest taxpayer which report internally consistent income, both to the jurisdiction of H and jurisdiction of L. So without loss of generality, taxpayer income is 1, and thus the income reported to authority H is R, and consequently the authority L is 1 minus R. So if both jurisdictions will conduct audits independently, which result in YH and YL, and this may result in double tax if YH and YL is more than 1, i.e. that exists on X, where YH plus YL minus 1 is equal to X. So the goal is that taxpayer will be able to minimize X or to eliminate double taxation. So in this case, we can choose to go to litigation or domestic pathway in both countries, or to use MAP as a domestic resolution mechanism avenue. However, in this model, we assume that the taxpayer is agnostic towards the real outcome, so it has no private information which enables him to pick which avenue that suits him well. And on the flip side, the tax authority will enter into MAP or litigation without considering the revenue impact in each country. So it's required by law to process requests, if any. Next slide. So the key text of this, without going too much detail into the math, is that since taxpayer cannot observe each affiliate, that it will result in winning, and that the CAs can also agree to disagree, which may not result in the elimination of taxation, the model then boils down to cost and time in administering the dispute. And what we observe is that first, that MAP will be less costly compared to litigation in both countries, because documents that could be submitted to one CA are exchanged between the CA, and the dispute resolution process, or in this case, a consultation, is conducted between CAs instead of taxpayer going to court in H and going to court in L. So essentially, CA shoulders part of the cost in administering MAP, which result in a certain expected cost, in which doing MAP is strongly preferred than litigation in both countries if the cost of MAP is approximately 1/3 the cost of is less than 1/3 the cost of going to litigation. Second of all is that the MAP would take less time to resolve compared to litigation in both countries, because litigation in two countries, as Qivi said, the other jurisdiction does not necessarily care of what happened in other jurisdiction. So the best scenario is that the best time would be if it will resolve simultaneously, i.e. TG in H equal to TG in L. However, the worst expected time is that if they were consecutively, i.e., the tax court or the litigation in another country starts after the litigation in the other country ended. So, but on the other hand, MAP will always resolve in the same time because in doing consultation between two countries, they will result in mutual agreement in the same time and implemented in the same time. So it will be strongly preferred if those conditions would apply. And third of all, we observe that in this case, a bilateral FTA would even be more cost effective, especially if taxpayer faces recurring transfer pricing dispute, because the expected cost and time is similar to MAP. However, bilateral APA applies for any fiscal year, for more than one fiscal year. So it would be strongly preferred if the condition applies. Next. Okay. We observed there's another road that has not yet explored in Indonesia, basically a safe harbor. This is essentially costless for tax authority because it will prevent dispute in the very first place. Since transfer pricing is high compliance cost for taxpayer and tax authority to administer, a safe harbor could be a better road that would be explored in the form of that either one exemption from a TP documentation requirement, or which very usually implemented in a lot of countries, is simplified TP method or safe harbor arm's length rate. It will benefit, as we mentioned, that it will simplify transfer pricing regime and reduce compliance costs. But it's also suitable for low-risk taxpayers, especially small and medium enterprise, which in the context of developing countries, it allows small businesses to be competitive and they do not have to bother about transfer pricing. And again, it will lead to a more efficient resource allocation and a certainty for both taxpayer and tax authority. And in the end, it will increase the level of compliance, especially among small taxpayers, which otherwise believe, even if they were otherwise believe that their transfer pricing will escape scrutiny by the tax authority. Next. Now, there are, of course, some issues that there has to be addressed in safe harbor, and I will only with one, which is basically that it might diverge from the arm's length principle. So in designing safe harbor, it should have a lot of features so that it will not result in the erosion of tax base, or it will not result in disincentive, especially for tax authority to honor these provisions, these safe harbor provisions. There are also other risks involving, especially if the safe harbor is unilateral, that the other country may not necessarily agree to the arm's length rate as determined by safe harbor in a particular country, then therefore it will result in a dispute. Next. Next. What is happening in Indonesia is that we have essentially the safe harbor, quote unquote. First, we have an exemption for TP documentation, which for small taxpayers, especially the revenue is below 50 billion rupiah, or the value of their related party transaction is relatively small, and there's only small risk of tax avoidance. They are not obliged to produce a local file master file in CBCR. Next. And second of all is Indonesia have actually a safe harbor profit, but it is very small, only for toy manufacturers, especially for children toy manufacturer, in which the taxable income that is appropriate for manufacturer is 7% of full cost, excluding raw material. However, it has several problems. First of all, it has a very weak basis, as the provision that has served as a legal basis for this regulation is usually used for small taxpayer which is not obliged to conduct bookkeeping. But as you know, manufacturer, especially in the relation of global value chains, they most likely have a bookkeeping and accounting system that is sophisticated. So the legal basis is not appropriate in this case. Second of all, it has a very narrow scope, which only apply to manufacture, especially only for children term manufacture. And third of all, it deviates from the arm's length principle because it applies on a whole entity basis instead of particular transaction, which would be covered. So in this case, it also covered the profit from the transaction with independent party. Next. In the last part, we propose design for safe harbor that could be applicable in Indonesia. However, for such a unilateral safe harbor, it requires changing of income tax law. However, it's still applicable in the sense that a similar qualifying criteria that is used for transfer pricing documentation, i.e. revenue threshold and the value of the party transaction, may also apply in this case to shield the Indonesian tax authority for disincentive or misuse by the taxpayer. It could also apply to, for example, low value adding services, which in the OECD transfer pricing guideline is there exists a cost plus 5% for a certain qualifying low value added service. It also apply to extend the provision as mentioned before, which is similar to for the manufacturer to be more applicable to manufacturer in a lot of more industrial, which could be supplemented by the existence of benchmarking. So a taxpayer could gauge that their profit against the profit of industry, the average profit of industry, similar to what we have done in 2009 and 2010. In this case, it could extend to be used as a benchmark for taxpayer, and it will, if the taxpayer reported it in those in the sense that their arm's length profit is in that range, it could be considered as arm's length and therefore it would not be audited. Next. And lastly, we propose a model for bilateral safe harbor, which is actually possible with MAP based on the sample memorandum on Chapter 4 of OECD transfer pricing guidelines, which could apply to low risk manufacturer and distributor and as well as contract R&D. However, we highlight several issues on the memoranda. For example, if there exists reliable comparable for the industry, as well as interaction with other related party transaction. For business cycle as well, as you mentioned, that the memoranda in the OECD transfer pricing guideline is static and which may not be appropriate given time business cycle. I think that is all that I'd say. Thank you very much.
Thank you very much for the great talk. You're bang on time. I think we have about 5 minutes before the next speaker. So if anyone has questions, please feel free to type them in the chat box. So while we're getting started, I have a question, because you mentioned that you had these two mechanisms, the conflict, the court mechanism, and the MAP. Is there a sample selection bias in the sense that some of these firms, is there a systematic difference in the type of firms that appeal for a court litigation as opposed to this negotiation, in terms of their size, in terms of their sector, or is it that they all go for one solution over the other?
Based on our research and based on our experience, also there is no much difference. The typical of the taxpayer who lodge for the MAP and the tax court and the tax court, but maybe there is a slight difference that usually a larger group have preference to take both ways. So they will take the litigation and MAP. Maybe Rossi, do you have any addition?
Yeah, in our cases, we sample, it's actually a random sampling. So we only check the timelines of between the issuance of tax audit until the issuance of tax court decisions. So I think it would be great in the future if we were to be more granular with regards to industrial type or size and company size or asset or whatever. But we only do an averaging based on the timelines.
Okay, because you'd expect if they have a better outside option or if they have more resources, they might use the court system as a means to extract more surplus because they can afford to. Whereas a less well-funded firm might opt for the negotiation. That would be interesting to look at. Really interesting. Thank you.
Okay, thank you very much. This is a joint work with two colleagues of mine, Zara Asatrian, who was presenting another paper of ours yesterday, and Jixin Dai, who is in Brenni University in China. So this project is a joint collaboration with the Baoshan Tax Administration. Baoshan is a district in Shanghai. This is a very classical tax RCT where we try to test the impact of several interventions, okay? So in a nutshell, I will speak about the agenda, and I will first motivate why we're doing this stuff and what is our contribution to the literature. Then I'll briefly show you the experimental design, some very short results and the conclusions, okay? So ideally I should be done in 20 minutes, hopefully. So as we know, tax compliance in general is one of the biggest challenges faced by the governments. And this is equally applicable both to developed as well as to developing countries, in my view. And here, basically, we can see that there is a big tax gap, for instance, both in the US and in the UK. And the tax gap can be even bigger, for instance, for developing countries. And the governments are facing actually a decision, kind of a complex challenge, how to increase tax compliance. Our reading of the literature in general, the understanding of policy making by the government suggests that we can think about two kind of different approaches for this. One is the mainstream tools. So the governments are playing around the audits and fines in order to increase tax compliance. These are, I would call them the classical tools. And in recent years, actually, we have seen quite increased interest in nudging in many different countries. There are many excellent reviews like the one by Mascagni, and also Zara and I had a paper that was presented yesterday where we tried to do a meta study of all the RCTs. And at this stage, there are around 45 papers, if I remember correctly, in our sample. So basically, this is kind of getting quite widespread, both in developing as well as in developed countries. So just to give a very brief description for those who are not in this literature, what is in general nudge in an ordinary taxation context? So these are mainly low frequency messages. So mainly they are just letters sent on behalf of tax authorities, or the letters, for instance, can be also combined with some reminders. And these are basically sent, for instance, before the due date, asking the taxpayers to pay their taxes. And the content of these messages can vary, okay? So there are deterrence nudges that somehow remind the taxpayers about the audit probability. They remind about the fact that they can be audited, and they also remind about the fines. This we call deterrence nudges, as well as there are non-deterrence nudges and reminders that simply remind the taxpayers about the fact that they have to pay taxes, or for instance, play around the tax morale, saying, for instance, that paying taxes is fair, you should really do so, or like the majority is paying taxes, so please do so yourself. So there are the tax administration can play a lot around the contents. And these messages are actually nudges, following really the definition of a nudge. So these messages and reminders that are sent on behalf of tax authorities, they neither forbid any option. So the taxpayer who is receiving the letter still can decide whether to kind of comply or not. And also they are not also changing the economic incentives. For instance, these messages are not changing the audit probability. These messages are not changing the overall fine rate, so far, so forth. So in general, like from the classical perspective, these messages are considered as nudges. So here I bring a few examples from the literature so you can immediately understand what I mean. So this is from Carlos and Scott Taschini, published in GIBO. So for instance, the deterrence message is this one. Did you know that if you do not pay the CVP on time for a debt of 1,000, you will have to disperse 268 in arrears end of the year, and the municipality can take some sort of legal action. So this is a deterrence message. And for instance, another other message that you can see below that I'm not really going through because of time constraints can be considered as a deterrence, a non-deterrence nudge, okay? So the question that we're asking in this paper is whether high frequency nudges will be more effective in increasing tax compliance compared to low frequency nudges. Okay, so imagine a tax authority that is frequently reminding taxpayers to pay nudges, to pay their taxes, for instance, like sending a message every week or sending a message every 2 weeks, compared to a scenario, for instance, where the tax authority would remind the taxpayers only once in a quarter or would remind only once in a year. Okay, so in other words, we try to compare different frequency of nudging by tax authorities and check whether this is having an impact on tax compliance. Okay, so why are we doing this? So is this really a very trivial question that we try to ask, or this is not a trivial question? So in general, if we think from the behavioral econ perspective, it has already been shown quite a lot that individuals have kind of limitations in self-control, memory, attention, so far, so forth. And there is a big literature that shows that reminders are really effective in kind of trying to induce people to kind of doing some tasks, and they bring these tasks to the memory of the individuals, okay? So, but basically, if we think about a non-frequent reminder, for instance, if you get a reminder once in a quarter, or if you get a reminder once a year, so once you get this reminder from tax authorities, there can be many, many reasons why you may not really act upon the reminder, okay? So for instance, there might be some other competing and more attractive activities, like for instance, you have to pay your money as a tax, but you think, okay, there are other things I can do with this money. Let's just do something else, then I will pay the tax. And then this way you will basically maybe forget about the tax in the future and you don't pay the tax eventually. There can also be procrastination. Okay, I got the message today, I pay tomorrow, and then tomorrow you say I pay it the day after tomorrow, and this way tomorrow never comes. Or for instance, there can be some sort of an inappropriate timing of the reminder. You get in the middle, for instance, of a working day, and then you have a lot of activities to do, and then you completely, for instance, forget about the reminder, okay? Now, if you think about like high frequency reminders, they somehow try to kind of block all the kind of aspects that I've mentioned above. First of all, they can continually drive the individual's attention to this pending task. So you get a message on Monday saying, okay, you have to pay your tax. If you forget about it or you don't act upon, you get a message, for instance, next Monday or Tuesday saying, okay, you have to pay your tax. So, and until you pay your tax, okay? And the other thing is that if you get frequent messages from the government, maybe this frequent messaging can create some sort of a sense of pressure, in the sense that as a taxpayer, you might think that the tax authorities are really following you and they're trying to make you to pay the taxes. So the higher is the frequency of the messaging, maybe the more is the pressure that you try to induce as a government or as a tax authority on your taxpayers. And if this happens, then maybe this eventually results in the taxpayer acting upon the message, okay? So this is the first channel that can positively affect, that can kind of result in a positive effect of the frequency of the messages. But the point is that there can be also another channel that can really work against the frequency of the messages. So this kind of concept about the habituation has been developed in psychology. So the more frequently you contact your, for instance, taxpayers, the more frequently you contact individuals, they can kind of get some sort of an immunity against, these messages, okay? So for instance, you are a taxpayer, you get a message on Monday saying, please pay, and then you get a message next Monday saying, please pay, and like this, you get accustomed to the fact that you are going to get all the time messages from the government. And eventually, actually, what can happen is that at the end, you do not really act upon the message because it's a normal thing for you to get all these kind of messages from tax authorities. So you don't care any longer. So ideally, so the channel one it results in a positive impact, while channel two says that, okay, there might be no impact. Okay, so that's why we are trying to kind of test which channel is going to be more likely at place and which channel is going to kind of affect the taxpayers more. Okay. So what briefly about the contribution. So there is a recent literature about recurrent nudges, and basically what these studies do in a nutshell. So they compare the human behavior and recurrent nudges. For instance, you are reminded that you have to go to a dentist maybe every say like half a year, or you are basically reminded every week that you have to go, for instance, to gym. This is the paper by Calzolari and Nardotto. And actually, this kind of treatment is compared against a treatment where the control is no messages. Okay, so a control group that receives no messages is compared to a treatment group that receives recurrent messages. So actually, differently from this literature, what our paper tries to do, it tries to compare different treatments with different frequency of the reminders. Okay, so there will be high frequency reminders, there will be medium frequency reminders, and there will be low frequency reminders, and there will be no reminders at all. Okay. So the second contribution is that we are kind of contributing to the literature on nudge applications to tax compliance. So far, the researchers have, in our understanding, have studied really a broad spectrum of interventions. For instance, trying to understand whether the timing of the communication matters, the content of the communication matters, so far, so forth. But as far as we know, so it has not been studied whether the frequency of communication can really increase tax compliance. Okay, so this is the second contribution to the literature, which is kind of also connected to the first one. We just try to kind of make a borderline, but somehow those two are kind of merged with each other. So what we do, we run a randomized controlled trial in the People's Republic of China. So we have 1,742 late property taxpayers in Baoshan region in Shanghai. So these individuals were supposed to pay their taxes by December 31, 2018. But actually what happened is that as of September 2019, so these taxes were not paid. In other words, there was roughly a 9-month delay between the due date and the time where we intervened. Okay, so this individual seemed not to care too much about the taxes. So, and one of the good things of the Chinese context is that basically the communication between tax authorities and taxpayers seems to be fully digitized. So the tax authority is reaching out to the taxpayers through messages. Okay, so and this message is quite costless. So one in terms of money, so one message costs around 6 cents or 0.4 RMBs, and so increasing the frequency of the messages won't be really a huge burden on the tax authorities in terms of the money spent. Okay, also administratively, because basically it's already, the infrastructure is already there. Okay, so very briefly about property taxes in China. I'm not a really big expert of this, so if there are Chinese colleagues and think that I'm saying something wrong, please forgive me. So basically, it's a new phenomena, the property taxes in China in general. So it was initially introduced in two Chinese cities, Shanghai and Chongqing. And actually, what it says is that if you are a resident family of Shanghai, you start to pay property taxes for the second house onward. And if you are a non-resident of Shanghai, and in other words, you don't hold the Shanghai hukou, so you start to pay the property taxes from the first house onward, okay? So the first square meters per family member are tax exempt. So for instance, if you have 4 members, a family of 4 members, then for you, for 240 square meters of your properties are for tax exempt. And the tax rate is usually set at 0.6%, and the tax base is the 70% of the house price, okay? So this is basically in general the overall setting. And what I want to say is that most likely we are working with quite wealthy or middle class families, because basically we are working with those who are able and potent enough to buy more than one house in Shanghai, or at least one house in Shanghai, for instance, if you are a non-resident. So in our view, the overall liquidity constraints are not really a big issue for these families. So basically, it's mainly other channels that drive this non-compliance behavior and the non-payment of the overdue taxes, okay? So briefly, our experimental design has basically 4 different treatments: a control treatment with no communication, a low frequency treatment where we send only one digital message during the trial, reminding the taxpayers to pay, a medium frequency treatment where we send a digital message once every week, asking for the taxpayers to pay for 4 weeks, and a high frequency message that we are sending 2 messages per week, asking the taxpayers to pay, okay, for 4 weeks. So in other words, there is 1 message in the control treatment, 0 message in a control treatment, 1 message in the low frequency treatment, 4 messages in the medium frequency treatment, and 8 messages in the high frequency treatment, okay? So the content of the reminders is always the same. So what we are doing, we are reminding about the property, about the due property tax that the person has to pay, and we are reminding about the overdue fines. So basically, we are sending also a notice that if the person is not really paying the taxes, his or her house is restricted from trading, so you cannot really sell your house. And also there is the message contains friendly tips about how one can pay a tax and the phone number that the taxpayer could call if he or she needed some help. Okay. So the randomization was individual level randomization. So one might think about the spillovers, but this is not really a big issue because Baoshan is really a huge district of 3 million population, if I'm not wrong. We are working only with 1,742 taxpayers. So the likelihood that these guys, all of them know each other is quite small. So the messages were dispersed from September 17 to October 12. So we started the trial on September 17. And on October 12, we stopped the messaging and we evaluated the impact of our intervention on November 18. Okay, in other words, the trial was from September 17 to November 18, 2019. So to coming briefly about the results, so we have the following econometric model to identify the treatment effects. So our dependent variable is a binary variable that captures whether the person declared the tax during the trial or not. So if the person declared the tax, it equals 1. If the person did not declare the tax, the variable equals 0. So this TIT is basically our indicator variable that is denoting to which treatment group the individual belongs to. And our omitted category, the reference category, is the control group. So in other words, this BT is identifying basically the effect of each single treatment compared to the control group, okay? And we also have the XI is basically a vector of control variable. So we introduce age, gender, the tax amount in 2018 that the person had to pay and did not pay. So the number of months the individual was paying taxes starting from the first day she owned the property. Okay, so those are our control variables. And this is the econometric specification that we are using for our results. So first of all, very descriptive results. Actually, what we see is that the compliance in the control group is quite low. So this y-axis is basically the fraction of compliant taxpayers in each treatment. So what we see is around 4% was compliant in the control group. So we see that basically one message is increasing. One message is increasing actually the compliance. We see that 2 messages seem to increase even more, and basically the 8 messages basically are also increasing, but there are differences. For instance, if we jump from 1 message, which is the red bar, to the green bar, from 1 message to 4 messages, and if we jump, for instance, from 4 messages to 8 messages. Okay, it seems that basically once we start to increase the frequency, for instance, if we look at the orange bar, so the additional impact of each single message is starting to decline over time. So maybe if I go to the econometrics, it's going to be much easier to understand what I mean. So first result is that reminders substantially increase the tax compliance. If we look at all three, treatment dummies, we see that compared to the control group, the compliance is quite large in all the 3 groups. Then basically what we are doing, we are comparing tax compliance in treatments with, what we actually do, we show that the tax compliance in treatments with recurrent reminders, in other words, in this medium frequency treatment and high frequency treatment, seems to be higher than, for instance, the tax compliance in the low frequency treatment. So what we do, we compare we compare the medium frequency with low frequency through a wall test, and we compare the high frequency with the low frequency through a wall test. And actually what we do, we reach to result 2, that is tax compliance in high frequent messages in MF and HF is significantly higher than in the low frequency treatment, okay? So and then actually what we do, we try to understand what happens. We try to understand what happens if we compare medium frequency with low frequency, and if we compare high frequency with medium frequency. Okay, so what we find actually that the jump from low frequency to medium frequency is higher. So if we increase the frequency of the messages, it seems that actually tax compliance is increasing. But actually when and this increase is around 40%, but when we are comparing the frequency of messages from the impact of the frequency of messages when going from medium frequency to high frequency, what we see is actually the increase in compliance is around 12%. Okay, in other words, initially, if we increase the frequency, compliance seems to rise. But after a certain point onward, if we start to push on the frequency, the compliance is not really rising as much as it was rising in the beginning. Okay, so this is basically the result 3, which in my view seems kind of interesting. And we also look at what happens temporally. So this is basically the Kaplan-Meier curves, the survival curves. So it starts from September 16 and goes until basically the end of the trial. So here on this axis, on the y-axis, it is the probability of compliance or the fraction of individuals that basically non-compliance, or the fraction of individuals that survive at the end. So for instance, if we look at the orange bar, we see that around 80% of taxpayers survived, which means that basically around 80% of the taxpayers did not pay the tax. Okay. So here what we see, the most important thing is that we look at what happens on the reminder days. So these vertical bars are basically our reminder days. And actually what we see is that in medium frequency and high frequency treatments, in the orange and the green curves, on almost every time on the reminder days, we see basically kind of a jump in tax compliance. Okay, so as soon as you are receiving a reminder that is reminding you that you have to pay, you kind of act upon this reminder and you pay. Okay, so this, while basically we see that this effect is absent from this red curve and the blue curve, where basically people received either no reminder or only one reminder. Okay, so this is kind of an indication of our first, seems to be an indication of our first channel, that reminders are either all the time bringing the action to your mind, or basically this reminder are creating some sort of a pressure, inducing you as a taxpayer to make the payment. Okay. So another interesting thing is that as soon as we stop sending the reminders, this is this 25th day. So the tax compliance from 25th day onward is kind of small. Okay. So what happens is that everything happens from day 0 to day 25, when basically we are sending reminders. And once we stop the reminders, then there is some stuff still going on, but somehow this is much smaller than on the days of the reminders before day 25. Okay. So in a nutshell, what we do, we try to study what is the impact of the frequency of the messages on tax compliance. We see that basically the frequency seems to matter. So more frequent messages seem to trigger more tax compliance. But actually what we see is that at a certain point onward, once we start to increase the frequency, the impact of each of the additional messages are starting to become lower and lower, which kind of seems to suggest us that very frequent messaging might not be really a that beneficial thing for at least in the concept, in the context of tax compliance. And actually what also we seem to find, given this graph, is that the messages do not really seem to have long-lasting effect, because as soon as we stop on day 25, somehow the activities of the taxpayers seem to stop. So basically this was our project in a nutshell. If you have questions or comments, I'd be very happy to respond. Sorry if I was quick. I was trying to kind of fit in 20 minutes, a lot of stuff. So hopefully I was clear enough. Thank you. Miguel, you seem to be unmuted.
Thank you very much. That was great. I think you still have time. So I already have a question from James on. So are there long-run impacts of the reminders? That is, do the reminders increase compliance in the periods or period after the reminders stop being sent? Or do you need to keep sending letters or, I guess, messages to maintain compliance? I think you alluded to that at the very end, but if you could elaborate on that.
Here is the survival. I mean, here is the survival curve, and I mean the drops seem to be mainly on the reminder days. James, if you see basically on this reminder day, for instance, on the second one, so you see a big jump. Also, for instance, on the third one, you see a big jump. There seems to be something going on after the reminders, but somehow it seems, I mean, at least visually, it seems that basically whatever happens, the most part happens on the reminder day. But yeah, I mean, that's basically my answer, if I understood the question correctly.
Can I, before you move away from that slide, I have a follow-up to that, because at the moment your treatments are frequency, but there's also a a slightly different effect, which is just amount. So you frame so it seems that my question is there an optimal number of messages that I need to receive in order to, so it's not how often I get them, but it's rather the number of messages. So you could still send me a message a week, but after week 8, I get the idea and I do it. So could we reinterpret your findings in that framework or in that light, if you like?
That's an interesting perspective that actually I haven't thought about. I have to think about it. I mean, I'm not sure I have an immediate answer about this, but yeah, thank you for this note. I will think about it, whether this can be an explanation or not. It
might be an interesting control to add if you still have the funds and the time and whatever. You know how it is with field experiments. But anyway, just a thought. I have another comment from Rick L. When do you talk about compliance and payment, do you mean payment in full, partial payment, or payment arrangement? Did you consider the age of the outstanding debt?
This is full compliance in the sense that as soon as you have to declare your taxes, as far as if I'm not mistaken, you have to declare the entire amount. So if you are paying a tax, your housing property tax, you simply have to declare the entire amount. So I think partial payments are not allowed. So we are looking regarding the age of the debt. Basically, maybe I was quick. We are looking at the debt in the overdue taxes in 2018. Okay, so basically, in this regard, the date of the age of the tax debt is the same, is homogeneous for all individuals, in the sense that those are individuals that did not pay their 2018 property tax. So, and it starts for everyone on January 1, 2018, and should end for everyone on December 31, 2018. So in this regard, the age, at least for 2018 tax, is the same for everyone. We have additional controls that we can, for instance, control whether the individual paid the 2017 tax or not, the 2016 tax or not. Yeah, I mean, we can do these kind of tricks for sure.
So I've got a follow-up question from James Alm. He would, I guess he reformulates the question as, if you revisited these taxpayers the following year, so I guess that would be 2020, when no reminders were sent to anyone, do you see any differences in your samples?
Actually, I have thought about this. I have to ask Jixin, who is my co-author and with connections in Chinese tax authorities, to get this data for us. It might make a lot of sense to kind of see what happens in 2020. So 2019 actually. So whether in 2019 there were more individuals in the control group, for instance, with overdue 2019 tax than, for instance, individuals in the treatment groups with 20 overdue property tax. Yeah, I mean, I can ask this data. This is an interesting point. Maybe we can check this for sure.
Yeah, I think that's a really good point, because often the easy criticism that people have of nudge is that the measurements or the treatment effects are always short run, but if you can actually demonstrate that there's a long run effect, that would be super cool.
Actually, what we found in our paper with Zara in our meta study, what we find is that this effect of nudges are really short-lived. So like in the long run, there is almost no average effect across all the studies. That said, that's why we kind of did not really take this data maybe for 2019, because maybe we are biased by our prior work, but maybe this is a good point to kind of study and see whether the frequency may matter in this kind of stuff.
Absolutely. So just checking the floor, we still have 3 minutes until the end of the slot. So if anyone has any more questions. So one perhaps flippant question. Did you ever consider the possibility that some people might really get annoyed at getting messages? If I get a reminder when I referee a paper, and I get these reminders all the time, I get really, really annoyed.
There is a 2018 paper, I think, published in JPUB, which shows that if you send messages asking to donate and reminders asking to donate, people seem to kind of unsubscribe from such kind of reminders. If I remember correctly, it was about donation context in 2018. And yeah, I mean, I think we discussed this in the cost benefit analysis. I have to check, but yeah, this is like a cost like a mental cost, a psychological cost that nudging can have on individuals. And one of the problems actually of this literature when doing cost-benefit analysis is that this kind of mental costs are disregarded, and we only look from the perspective of tax authorities, trying to understand how much tax has been raised as a result of our intervention. But yeah, these costs have also to be taken into account, and those are hidden costs that cannot be quantified. But in our case, it was not possible to unsubscribe from the messaging. But I mean, this is an interesting actually project, an interesting idea that I'm still boiling in my head. Maybe it might make sense to kind of allow the taxpayers to unsubscribe and increase the property and the frequency of the messages and see actually what happens.
Thanks. Two comments from two different people. So David Bagg would ask you to put the slide with the results back up so that he can take some notes. And while you're doing that, Rizki Harahap asks, I think you alluded to this earlier, but do you know if there's any relationship between taxpayers that get nudged? So whether they're neighbors and family, but I think you mentioned this briefly.
I think actually this spillover effect is kind of a low probability event in this context, because we're working with 1,700 taxpayers in a district that has around 3 million people. So though even if spillover effect is present, the estimates we identify here is going to be the low bound, in the sense that without spillovers, perhaps the result could be even higher, but at least spillovers present, we find some effect. So it would be a problem if we, for instance, would see that what we get in the control is very much close to what we would get, for instance, in a one message treatment or in a two message treatment. This would somehow indicate that we have spillovers, may have spillovers in our study that we cannot control. But I mean, since the control group that received no messages has very low compliance, this seems to be some sort of an indication that spillover effects are by and large absent. Otherwise, you would see this blue bar very close to the red one, and perhaps the red one very close to the green one.
Yeah, good point. Thanks. Okay, so we're about ready, almost 15:15. So the next speaker today will be Maximilian Zieser, talking about the acceptance of online-based automatic tax audits. So as always, 20 minutes plus 5 minutes Q&A. I'll give you a wave at some point when the time is near. So thank you very much. The floor is yours.
Thank you. All right. Okay, I hope my presentation is visible. Perfect. All right, okay, so I'll be presenting on the future of tax audits, or so we think. Just clicking to, yeah, the future of tax audits, and particularly on the acceptance of online-based automated tax audits and how they might influence trust and power in tax administration. This paper is co-authored with Paul Breziner, Professor Eberhardinger, and myself, and we're all from WU Vienna, the business taxation group there. This paper ties in really well with other things we have already heard in this conference. Just a little reminder, a little overview. There have been major advances in tax administration, especially in services, and also in the power to detect tax evasion. And this has been driven not only, but also by digitalization. So we have, for example, an increased digitalization of tax audits, for example, AI-based and algorithmic auditing and pre-auditing. Increase in data collection, surveillance. We can see that some countries developed online cash register systems. There's also more services that taxpayers can find online, for example, e-filing and online administration of tax accounts. And then there is cooperative compliance, which we also have heard about today, whose goal is to increase transparency and cooperation between taxpayers and provide timely certainty. From all these developments, there's basically only one expectation that we have, namely that there will be in the near future e-audits, that's what we call them. And these are automatic and online-based tax audits. And while we expect them to be inevitable and basically an extension of these developments that we've already seen, we also think that they might be quite disruptive in terms of acceptance by taxpayers and also by tax authorities, and also in terms of tax compliance. So how does this future actually look like? So the Austrian tax administration They envisage a system where taxpayers can voluntarily upload accounting data, and this is different from normal tax returns, normal data that you would put in a tax return because it is more detailed. This data is then automatically audited, for example, using AI or statistical methods. And as a result, the taxpayer gets an automatic assessment of income tax and maybe even a pre-filled tax return. Now, this framework may include both enforcement and service-related features. And based on interviews with the Austrian tax administration, we have identified 4 potential features that are quite realistic and which are closely related to online services, cooperative compliance, and also data-driven auditing. The first is data privacy, which means that after using such an online e-audit service, data is deleted and not stored indefinitely. There's certainty that taxpayers can rely on the results of such an e-audit because there will be no subsequent conventional tax audit. Then there's transparency, namely that tax auditors can get additional information about how the results of such an e-audit was generated. And there's independence of tax intermediaries, meaning that the process can be used without tax advisors and might thus be cost saving for taxpayers. Our research question thus is, how does e-audit and e-audit in combination with these features affect acceptance by taxpayers and might also in the long run affect compliance? And we test this both with taxpayers and tax auditors. Why is acceptance important? Of course, for after introducing such a system, it will probably be voluntary for the time being, which means that if taxpayers don't use the system and tax auditors don't accept the system, it will be a huge waste of resources and nobody will use it. And at the same time, depending on the features of such a system, it may also influence tax compliance. We base our analysis, in particular with tax compliance, on the slippery slope framework. We've already heard about it. I'm just giving a quick overview. It distinguishes between voluntary compliance here on the left side and enforced compliance. The enforced compliance is the classic economic side of tax compliance, and is mainly determined by power, meaning audits and fines. On the side of voluntary compliance, this is the non-economic, some might say non-rational side of tax compliance, which is mainly determined by trust in tax authorities. And here, this can be fostered by fairness, for example, fair procedures and good services. These two concepts, however, they interact with each other, and power might also influence voluntary compliance because, for example, power might protect honest taxpayers from free roamers. Based on this, we develop our hypotheses, meaning that e-audits in combination with all these 4 features here will increase trust in tax authorities and will decrease the perceived power of tax authorities because each of the 4 features is a concession made to taxpayers, which might make their life easier, but might also provide opportunities to evade taxes. Overall, for taxpayers, this means that they will react to each of the features with increased acceptance. On the side of tax auditors, the predictions about trust and power are the same. However, we don't know how they judge the importance of trust and power to promote tax compliance. So we can't make a clear prediction about how they will accept such features and e-audits. We test our hypothesis with a experimental survey that can be divided largely mainly into 3 parts. We have first an introduction to the topic and some single measures. And by single measures, I mean that they were only measured once, items and scales. Here we measure the baseline measures, the baseline of trust and of power in tax authorities and socio-demographic data. And what follows is the description of e-audit programs plus the randomized features. So what we do is we take the 4 features and present them either randomly as available or as unavailable to taxpayers. To this presented e-audit program, taxpayers can then, participants can then react by indicating their acceptance of either using on the side of taxpayers or endorsing on the side of tax auditors, and how they would expect this to change their trust and the perceived power of tax authorities. We then ask participants to repeat this process and start over with a newly randomized e-audit program, and we do this 4 times. So here we have repeated measures. As an e-audit, we present what I've already said, a hypothetical but realistic e-audit process as envisioned by the Austrian tax administration. Taxpayers can upload data, it is audited. Inquiries are automatically generated if necessary, and the tax due is assessed automatically. We then randomize the availability of the 4 features, and we measure acceptance, the perceived change in trustworthiness, and the perceived change in power of tax authorities. We cooperated with the Austrian Ministry of Finance, the Chamber of Commerce, and the Federation of Austrian Industries, collecting 300 responses from business taxpayers and 530 responses from 530 Austrian tax auditors. As you can see, our distribution here in business sales is quite even. So we got answers from actual businesses, which are quite small or very, very large. And we also test whether we find different effects for these firms. This is the first indication of our results here. This is just over all observations that we collected, how people reacted in terms of their acceptance to the 4 features. And we can see that for data privacy, audit certainty, transparency, and independence, taxpayers reacted with higher acceptance whenever any of these features were available. Here we see the differences plotted, which are positive and mostly significant. On the side of tax auditors, things are quite different. The signs are negative here. Data privacy, audit certainty, transparency, and independence actually caused them to accept these e-audits less. And particularly audit certainty seems to be problematic. To test our repeated measures, we used multi-level models, which means we were able to distinguish between within subject effects, which means testing how a response changes if the realization of one of these features changes. So if it switches from available to unavailable, how the response from a participant changes, and the between subject effect, which just means the overall reaction to features or the ad hoc reaction to features. I will not go into more detail, but jump right into the results. And what we see here is that for taxpayers, their acceptance, as we saw already in the descriptional statistics here, react positively to all of the features with more acceptance, react positively to data privacy and audit certainty with increased trust, and we do not see any change in power, in perceived power of tax authorities through any of these features. We find these mainly here in the within participants effect, so changes between rounds, and less here in the between participant effects. For tax auditors, things look quite differently again, especially audit certainty leads to much lower acceptance and to concerns about losses in power. Here we find these concerns about losses in power also strongly in the between subject analysis. To summarize these results, we find opposing views between taxpayers and tax auditors. Taxpayers seem to perceive e-auditing as mainly a power increasing measure, as seen by the mean responses, and they react with acceptance and trust when certain features are included. Tax auditors actually see this as a power decreasing measure, e-audits, and react with disapproval, particularly when audit certainty is included. We perform additional tests with other variables, namely with the perceived subjective benefit of e-audits, with the correctness, the perceived correctness of e-audit results, and change in uncertainty of paying taxes and compliance costs. And we find that taxpayers find data privacy and audit certainty to be beneficial, and that audit certainty will reduce uncertainty and compliance costs. We also find that they perceive independence of tax advisors to be more cost effective, but this might also slightly increase uncertainty, which makes sense. Tax auditors, interestingly and surprisingly, also find audit certainty and transparency to be beneficial for them personally, but they also perceive audit certainty to strongly reduce the correctness of e-audit results. So they are afraid that this will lead to incorrect, false results, or even abuse maybe. We run a host of different analyses. We run split sample analysis here, differentiating between large and small businesses, and between employees and business owners. And we find that our results hold across these two groups with no significant differences in effects. And we also run alternative regression models to make sure that results are not driven, for example, by later responses. Not all participants actually completed 5 rounds. And again, results hold in different model specifications, in classic regressions, fixed effect regressions, and so on. Now, to conclude, apparently taxpayers appear to be mainly interested in service quality, but tax auditors seem to be focusing on the potential non-compliance and abuse by a minority of taxpayers. This ties in very well with the compliance pyramid by Braithwaite, the Australian ATO model, meaning that they might be forgetting about the majority of taxpayers who benefit from services much more than they might benefit from increased enforcement. Now, from our point of view, policymakers should thus consider, first of all, including benefits for taxpayers in such novel approaches, because this will increase utilization, it will increase trust, and hopefully also compliance. They should also include safeguards to prevent abuse of the system, and this might also alleviate concerns of tax auditors and increase support within tax administrations. And as always, there should be clear communication and education about the risks and benefits within the tax authorities, and as well as with taxpayers. With this study, we hope to contribute to a variety of literature strands. First of all, of course, about novel approaches of tax collection and the digitalization efforts. Also on the literature of tax compliance and how a nuanced approach to tax collection is important also when we think about digital services and about e-governance. We are among the first studies that is actually able to compare taxpayers and tax administrations' points of view on the same topic and on the same measures, which is quite important, especially considering that such policy changes are quite impactful on both sides. And we also provide some evidence about possibly about other e-governance fields, which have similar concerns about the trust-power balance, where self-reporting is necessary. For example, insurance, healthcare, or employment services. I was quite quick, hoping for more time for comments. So this is it from my side, and I'm happy to answer any questions and looking forward to the discussion. Thanks.
Thank you very much. That was super interesting. So I'll open the floor for comments. So we'll wait until we see some comments. Okay. So we have a first comment from Eric Kirschler. I may have missed it. How did you define power? High audit frequency and harsh fines, or professionalism and expertise?
Okay.
What differences would you expect depending on the operationalization of those?
So we operationalized power mainly as the coercive power side of things here. We did not use the professionalism operationalization, so the extended slippery slope framework, of course, distinguishes here. We use the audit and fine side.
Okay.
Exclusively.
So given that we didn't see the actual manipulation, so did you actually say that there would be a very high probability of being detected and the fines would be harsh? How did you operationalize it in the scenario?
So we didn't operationalize power in our treatments, but we asked for it in our dependent variables, in our measures. And this was just a 3-item scale asking about the expected increase or decrease in the tax authority's ability to detect tax evasion, in their ability to fine tax evasion, and to, the third one, along those lines.
So James has a question. You focus on the impacts of these features on attitudes. Do you have evidence on the impacts on actual compliance, or is this for future research?
This will be for future research. So we focused on trust and power because in our expectation and our, these are things that participants tend to answer quite honestly. We did not dare to ask about actual tax compliance, but based on previous research on trust and power, we think these results might be extendable to tax compliance behavior as well. But of course, we cannot show this explicitly.
It might vary on the firm's size, right? Because if the stakes become extremely large, you might see some divergence there. But yeah, fair enough. Yeah. Just any more comments? If anyone wants to ask, we have lots of time. Sorry, I'm actually having a look at your slide, given that I asked about the item, so I'm taking.
No worries.
Let's see. So when you control for these types of entrepreneurs or firm owners, do you have a nice cross section in terms of industries? Because obviously some industries are more propense for evasion. Any effects there, because you had some nice samples?
I think yes, we do. So I think we cover most taxpayers, most types of taxpayers, because we were cooperating with these representative organizations here, the Federation of Industries and the Chamber of Commerce. And we didn't test any differences in industry. We only tested a size of firms, but results hold and are extremely similar. So we don't find any indication that there would be a difference between smaller and larger firms, even though the stakes in larger firms might be much higher.
Sure. Sorry, Eric asked a similar question. You have a wide range of businesses, small, very large. Any differences between them? I guess you're alluding to that. And sorry, persevering a little bit on the issue of firm size, you might have an interesting heterogeneity there, in the sense that the responder for a small business firm might be the owner or someone very high in the organization hierarchy, whereas for large firms you might get a middle manager. Or so how do you see that happening in terms of responsibility and these sorts of...
So we made sure with our filter questions in the beginning and the socio-demographic data, which I didn't present in detail, we made sure that people were presented with answers and questions that made sense from their point of view. So if people indicated to be only an employee, the question was phrased slightly differently, whether they would use or recommend to use, so that it made 100% sense to them. And still, we didn't find any difference in responses. And as you can see, even here, I'll highlight this quickly here, we do not find any differences in the absolute values of our dependent variables here. So this is sales and employee status, whether they're owners or employee dummy variables. And there is just really no heterogeneity in the results, which might be surprising, actually.
Sure. Although, if you have massive differences in sales, maybe using a log scale might be advisable there, because you're...
Actually, we didn't ask for specific numbers. We had a, I think, 8-item rating scale. Okay. So we can't actually do that.
Okay, got it.
So we made a median split here for our cross-section analysis, and here we just had to put in linear.
Sure, otherwise you run out of degrees of freedom. No, super interesting. So could you go back to your slide on the differences between, because you summarized it very well, the auditors and the... So I was a bit surprised why the negative response of tax auditors, given that if it's automated and it's electronic, why would they be concerned? Because if anything, power goes up. You just get more control.
That is really interesting. So I think there's a few things to consider. I'll go to our additional variables here. This is the group of taxpayers. This is the group of tax auditors. First, what we see is that they expect an overall. This is quite the middle of the scale here. So they expect a decent amount of correctness. However, I think that what this here, the very negative coefficient of audit certainty, so that there can't be an additional audit afterwards, that is more indicative not of the correctness of the results, maybe, but more of a chance to be abused. This is just conjecture, to be honest, because we didn't ask for that specifically.
Right. So that's surprising, though. Why would certainty of audits lead to less correct results?
Yeah, as I said, I think I think it was one of the channels by which auditors expressed their concern about abuse. And we can see that also we had open questions in the end of the survey, and we can see that answers from auditors really focus on audit certainty a lot, and they are very critical about that. Our first impression was that they might be concerned about their own professional future, but that we do not see at all here in our performance expectancy measure, which is the perceived personal individual benefits. So this is how we come to the conclusion that they are really concerned about this actual loss of power.
Do you think that they might be suspicious of AI methods as opposed to the good old-fashioned kind of old way of doing things, and that's could that be a reflection of that?
Yeah, I think so. So maybe this is sort of the duality here can be explained by this might make their job easier, which is also a possibility, of course. But this here is the mistrust basically in technology, maybe.
Yeah. Yeah, sure. There has been some polemic use in this country, at least, of AI algorithms in the education sector, although for different reasons. But I think there is always a mistrust when new technology comes in, which is, I think, really interesting. As these things become commonplace. Great. Any more questions to be put? Okay, I think that's it.
All right.
Thank you very much for the excellent talk.
Thank you.
This paper really, it is a very qualitative paper, not so much enhanced, not so much empirical, but it presents about how the informal sector taxation in Mogadishu was managed, managing the taxation of informal business sector in Mogadishu, which is really the capital city of Somalia. And I currently stay at National Graduate Institute for Policy Studies in Japan, and Abdinasir is a researcher at the Ministry of Finance of the Federal Government of Somalia. So views are not official. It is just limited to us. As you know, the issue of informal business sector and how to tax it was really getting some importance in developing countries and transition countries such as Somalia. We are now in transition. We are coming from civil war or from fragility to recovering. So the importance of this topic in such countries have been getting some intentions by economists and also business analysts, and even some labor market analysts. So there are also difficulties that these countries face when taxing informal sector. These difficulties include limited revenue potential, high cost of collection, opportunities for corruption, since fragile countries and many developing countries still corruption exists there. And also potentially this has, there is an impact on small firms which really feel burdened when it comes to taxation or formalizing. So, and that really comes against the protection and supporting of small businesses. But however, the informal taxation also has some benefits, including accountability of the government more to its people, economic growth, in which some literatures really showed, and also important source of local government revenue when it is formalized, a governance issue, tax compliance issue, and tax paying culture. And even another principle which is not written here, which is equity principle, whether some business communities are paying tax and some are not due to informality, but at least this is a broad case. This is an example of a graphic representation of shadow economy or informal share of the economy. We extracted it from IMF paper. So in our paper, it is written here the citation, but when doing presentation more quickly, I'm not sure, but it is it really extracted from IMF. Here is sub-Saharan African countries, and here is lower income countries, emerging markets, and advanced economies. This seems that lower income countries really have high tendency of existence of informal sector, and sub-Saharan African countries are part of low income countries, and also Somalia, which is the place of our study, is a member of sub-Saharan African countries. Here is how shadow economy exists in some countries in sub-Sahara, which are almost the neighbors of Somalia. This economist, Schneider, his study in 2005 identified the shadow economy portion of the GDP accounts 42% in Ethiopia, 36% in Kenya, 45% in Uganda, and above 36 in sub-Saharan African countries. So Somalia has been in fragile, in civil unrest. So if the region of countries are really doing such high level of shadow economy share of the GDP, this case seems to be worsening in Somalia due to fragility, due to conflicts, due to economic instability, economic shocks, political instability, insecurity. So this case seems to be more worsening than the region when it comes to Somalia. And some economists really say that Somalia's economy is almost entirely informal since the government institutions which used to formalize the sector were absent in more than 2.5 decades, and it is now close to 30 years of conflicts. But now it is time of recovering, and institutions in subnational and even national levels are starting the basic of registrations and formalizing the business. However, it has some challenges which will come in our presentation. Some literatures have really showed the way to tax the informal sector. For example, this study made by ActionAid says consumption taxes mostly included in the informal sectors. Before the trading goods go to the informal sector, this study really says that taxing as a consumption side before that good trading goods go to informal sector is a good case. Zambia has a good case of doing presumptive tax. Tanzania has a good case of doing turnover tax. So these kinds were some policies to tax the informal sector indirectly. And United Nations study also suggests a presumptive tax in developing countries. Kenya implemented in 2008 8 a turnover tax of 3%. Ghana, we have seen in literatures that Ghana also collects a 3% of turnover taxes. So these literatures say that even the existence of informal sector, there are some ways to collect taxes from them. The objective of this paper is to present how the concerned tax offices in Somalia, especially in Mogadishu, manage to tax this informal sector, and which is mostly small and medium enterprises. The study employs mixed kind of methodology, but it is qualitative way of presenting. We use a data from the Ministry of Finance archive. This data is a business data collected by the Ministry of Finance, especially Department of Inland Revenue. It contains the registration data of the businesses, which included their address, their capital length, although not fully disclosed officially, but the tax officers really used to guess, to imagine, to supervise the capital in which they were trading. Since this is the first point in time to go to informal sector in Somalia after 30 years. And also we used interview of economists to ask them how informal sector is having an economic impact to taxation system. And also we have interviewed some tax officials and some small business owners. So these are the findings, and some of them what is now the case in Somalia. The taxation culture officially came to Mogadishu in 2012 after the culture of tax collection disappeared in 1991 when the civil war erupted. And at that moment in time, when the government re-established in 2012, almost all businesses in Mogadishu were informal. The situation turned at that time to have an ad hoc fiscal system, including taxation system, which is not more organized, which is not more politically digested, but at least had some legal instruments to go and to collect taxes. Although at that moment in time, not all legal referencing materials were not fully applied. So after some time of collection tax revenues in a disorganized way, the situation started to go to fixed and negotiated kind of tax collection. At that moment in time, Office of Inland Revenue Department started to say business communities, you have to pay such and such monthly or quarterly, or some big companies maybe there should be some instruments they will be annually or biannually. So these kind of taxes were negotiated, what you can pay and what the government can accept from you regarding your business length. So it was a starting point. Then the ministry started to apply the existing tax laws, which were really enacted during 8 years and 70 years, some of them 60 years. Let me say precisely before the civil war eruption. So at that moment in time, the tax laws in place were applied. Tax base extended then to some informal sector activities, including telecom companies, some financial companies, transport sector, and also some utility companies, and even some other companies which used to provide services to the government. And lastly, the government started collection of sales tax of importing goods at the custom points. This sales tax is supposed to collect at the point of sale, and it is supposed to be paid by the last consumer, but the government took that policy to tax the informal sector indirectly before the goods go to the informal market, before the goods enter to the city. So the government started a collection of import taxes, import sales taxes at the port and airport. Since the country is mostly import dominant economy, where almost the entire goods consumed in the country are imported from the globe, except some light products which were really produced by some small industries we have in the city. After that, the government started registration and issuing tax identification numbers. At this point, the government had some fiscal muscles to ask the business to register and then take tax identification numbers from the Office of Inland Revenue Department. Even there is what is called a tax compliance certificate introduced by that office in order to continue enforcing of tax compliance. At that moment in time, the government said no public bid is given to a company which didn't have tax identification number and tax compliance certificate. And even the UN and most of non-profit organizations in the country have accepted this. So any public tender or any public advertisements of providing services, if it comes, the applying company or the contractor should have tax compliance certificate and also tax identification number. And then this is the last stage that the government is planning next year to apply a turnover tax on all small businesses in Mogadishu, which will be effective in January 2021. So this was the process that government took or undertaken in order to tax the small business sectors and also the informal sector in Mogadishu. But during this process, the big companies were formalized due to some pressures coming from the Ministry of Finance, especially it is Office of Taxation and some line ministries. For example, if it is a telecom company, the Ministry of Post and Telecom were really with us when going to formalize and to collect taxes from telecom companies. When going to financial sector, the central bank was with us. When going to some other companies, so mostly the line ministries have really working with us since they have the most referenced legal documents other than tax issues. Okay, informal sector in Mogadishu exists because of the nature of economy currently exists in Somalia. The country is a fragile country which is just coming from a civil war. Although even there are still some conflicts happening in the country, but they are getting less and less day after day. The country is still something of some sort of fragility. So no public institution used to register the business sectors. Regulatory framework was very weak. Enforcement mechanism was, although we will go to that kind of sector. So at this point in time, that nature of the economy, which is mostly informal, gives an opportunity of informal business sectors to exist and to trade in such economy. The second point we found is that Somalia's most dominant sectors are agriculture, including the fishery and also livestock. So these sectors account for more than 65% according to World Bank statistical, and they really do not pay any tax because they are vulnerable, and mostly tax laws were enacted at a time that Somalia was very eager to protect these sectors at that moment in time. So the biggest tax laws, which are sales tax and income tax, really exempts these sectors. So these sectors mostly are informal and they are legally tax haven. The third point we found is that the weakness of administrative capacity of Inland Revenue Department, or in general, the fiscal capacity of the government, and also the weakness of enforcement capacity lets the informal sector an opportunity to exist in a wide spread, in a very large scale. So these factors, if improvement have done, could solve the case, so that having a strong administrative system and a good enforcement mechanism could get all business sectors into the tax net and into the regulatory framework. So such weakness gives an opportunity of tax evasion in general, and most of informal businesses to really exist without taxation. The other point we also found is that most of small and medium enterprises in Mogadishu stay informal because they are afraid of the high costs when they try to go to the government book, to go to the formal sector and stay there, because the commerce license registration is high for the small business sector in Somalia. The municipality wants to collect something from you. If you're gonna register that, the Ministry of Finance may not let you go just. So they really say that our evasion and our being informal is more kind of easiness and less burden to us when it comes to going to the government book, the regulatory framework, the tax payment net, tax payment culture. So they really afraid of such high burden. And even the World Bank doing business survey report says that Somalia is one of the lowest countries in the list. So it seems that doing business in Somalia prevails, having the most burden in the world almost. And also studies by Loaiza 1997 and also Soto, they also found that going to formal sector is more cost to informal business and small businesses. There is an extreme little engagement of business community, which have historically existed. In Somalia, even taxpayer education and taxpayer engagement didn't exist sometime at colonial era, because the Mogadishu was colonized by Mogadishu was a colony of Italy. At that point in time, Italy government had a very big fiscal policy. They call it in Italian financial gap. So at that moment in time, instead of giving some opportunity to engage the business community, they really went another side of big enforcement and coercively capturing anyone who tries to escape from their net. But mostly businesses were supplied at that time by their companies. So little engagements really resulted that businesses not to come to the tax net. In the conclusion, Somalia's tax system has been recovering rapidly in Mogadishu and slightly in subnational states, having two informal businesses throughout the country, which really had a big challenge to the tax system. Informal sector also included by small scale businesses and agriculture sector, which hugely exists in Somalia. So the study also has some recommendations. Some of the recommendations were generally given by some authors, while one or two maybe was even recommended to the Somali tax authorities to do. The first one is to develop a joint tax policy and administration enforcement strategies with every level of government, with subnational countries, which are regional level, and even local levels, because going to lower tier of government, they mostly know what the national level government may not know, because they are close to local markets. So this will reduce the extent of informal sector in the country in general, and in Somalia, in Mogadishu particularly. These two economists also suggested this recommendation specifically to the Ministry of Finance of Somalia. The study also recommends that setting priority and also sequencing the reforms will have a good impact in the tax system, which really participate the government's tax administration system, and lastly can have to manage the informal sector. So Somalia has been doing some administrative and policy reforms, but mostly it seems that they were very basic. So continuing this and sequencing and going to a very tough and tougher level of reforms will really help the tax administration system to get stronger. IMF's fiscal capacity building study also highlighted this importance. Making tax system very simple, understandable, and a system which is not damaging the business community is really a very recommendable thought, and it is included in the recommendation list of our study. Also, these two authors, which are really most experienced in taxation system, have suggested that a tax system which do not harm taxpayers and also a very simple tax system will really improve the tax administration capacity that will capture some of a big level of informal sector. Better taxpayer services can improve the necessary engagement of the business community, as it reduces the long-term existing gap between the authorities and taxpayers. This is a gap which existed historically, starting from even the history before Civil War, that economists and some tax officials we interviewed, which used to work in this country since a long time, they have said that business community engagement and taxpayer education did not have a positive history even before the Civil War. That is why the government currently is paying more effort to this side of taxpayer education and business community engagements. Even today, although I'm far from the country, I have been seeing the Twitter that some taxpayer education and involvements and telling them the importance of tax system were really happening, some events of such issues. So this really needs to give a big attention. The other case, the other recommended issue is that the government should friendly incentivize the small and medium enterprises. This really gives them a way to come to the formal sector, and even simplifying the process of getting formalized is also a good instrument, since it reduces the burden of payments and the complex process that currently exists in the country. So these are the recommendations, and thank you for your attention. If there are comments and also questions, you are welcome. And I hope that my friend can also answer yeah, and can get into to have some discussions if it seems good for him. Thank you so much.
Thank you very much for the excellent talk. So I'll ask the floor for any questions. I'll maybe kick off. And if I were to ask either of you, if you had the simplest, most cost-effective policy recommendation, what would that be if you had to start somewhere?
Biden?
So if you had one policy recommendation that would be cost-effective, the most cost-effective first step or next step in this process, what would that be?
Okay, that would be this one, because in tax system, tax policy, tax administration, and enforcement are really most critical factors. If you improve in these factors, you will have an improved tax system. And if you did not improve in these factors, you will really get into trouble. So I could say simply that this is the most cost-effective one. And the government has been really practicing this with based on most and more advices coming from the World Bank and also from IMFs to do such issues. Since even these two economists are IMF fiscal economists, they also have suggested the same to the authorities.
Great, thank you. Just trying to look for the chat box. So just a follow-up question on that, on the other side, which was your taxpayer education. Has there been an effort for people to educate local taxpayers about the benefits of paying tax? I mean, it's a public good, as we know. Is there any data collection on that front in terms of understanding how small, medium enterprises see the benefits of paying tax?
Yes, this has been existing in very recent years, although it was supposed to start in a long time ago, but really it has started recently. The Ministry of Finance, since I'm currently in a study leave, I was also there, although doing our research was something separate from it. But yes, that exists. There has been efforts to educate taxpayer, and the Ministry of Finance started last time to have to organize some events to educate taxpayers, and this event started beyond Mogadishu. Previously, the case was in Mogadishu. Some taxpayer events were done. Some more business communities and more taxpayers were called, and even more academic society. So it was a kind of discussions, if there are complaints, and even For example, this December, the government has consulted some tax instruments which will come in next year with business communities and some taxpayers. So this has been existing in Mogadishu, and the federal government started this with help of the World Bank to roll out to subnational governments as such events were happening in other regional capital cities. And today it was an example that such thing happened in Southwest state. And it will go next week to a Puntland state. So this kind of engagement is really and is speedily going, but it really lacked previously the meaning, because at that moment in time, the government could not even provide some very less public services. But now people may see that the government is running a public university with a very cheap, just a markup education fee, building some roads, although there are some community participations are there, and also building some systems, having a government in place, doing security, some positively, but mostly at this moment in time, there is no a big answer saying that the government is currently providing all required goods and services to the public, but they are getting good understanding that this is an investment to the system, and it will have a positive impact of providing goods and services, as they have been seeing last 2 to 3 years.
Okay, great. Thank you very much for the response. And I think that covers the question. I'll take one more quick question from one of the speakers, P. So what measures have been introduced to try and simplify the complex tax laws to the informal sector? Coming from a developing country in South Africa, I think this is an area that will require a lot of focus. If you have a couple of minutes to respond to that before we wrap up.
Yes, the government has been focusing some measures, some instruments to simplify the tax system. This included the case that I have just said, which is taxpayer education and business community engagement, which is currently going on. The second side is that going to technology instead of being manual. In 2020, the government started that business, not business, the personal income tax is filed by online in Mogadishu, so that the employers of a company can, that filing system in an aggregate level will be put into our tax system. The system calculates and they can pay taxes without just coming to the Ministry of Finance and doing some fiscal documentations. So going to technology really started, and some key tax collection tasks were systematically established. That is also a kind of simplifying the tax system. There was administrative improvements that the government has been in place. Previously, the government used only to accept the fiscal cash, but currently the government accepts even mobile monies, checks, online, and even if you are assessed, you can deposit your money whichever private bank licensed by the central bank. So you are not currently obliged to come physically to the tax offices. This became a kind of simplifying the payment system. Another simplifying of the tax system is that the government started to operationalize the newly enacted revenue administration law, that going to subnational regions and even Mogadishu community, making them familiar with this revenue administration law that was newly enacted by the country, explaining them the basic instruments and the basic tax informations it had. Really, that law even allows the government to use technology instead of having only a fiscal documentation system in the previous laws. So this law currently allows use of technology. So such instruments have been done, and it is also going on work as mostly World Bank and some donors helping them to get a new technology.
Great, thanks a lot. That sounds really interesting and sounds like a really promising kind of future going ahead. That's fantastic. I think we're out of time, unfortunately. This is really interesting, but unfortunately we have to wrap up. So at this point, this is the last talk. By far not the least. It was a really super talk, super session. Thank you very much for all the speakers before and after the break.